there was some announcement, sorry. So digital platform, digital is the only thing that you should consider, that somehow it is able to, lower the transaction cost to interact, because whenever the parties are interacting with one another, there is a huge transaction cost involved. There is a matching cost involved. There are trust issues. There are reputational issues. Think of, if you will hear that you go to hinterland in India, some part you would hear that this Mela is being organized for last 500 years. Of course, it was a platform. In Mela, there are different buyers and sellers are coming, and perhaps a local chieftain, landlord was organizing that. So it was being platform, and it already established some reputation. The digital world is doing this, the presence of digital nature is doing only one thing, it's lowering the transaction cost. And it's also providing new tools to manage the network effectively. So now someone entity like Google, Uber, Amazon can come and capture that positive network, positive network effect, and pass on some of the benefits to the customer so that they become attracted to these particular platforms. That's what this digital nature is doing. Next slide, please. Okay, this is just, I wanted to show that how does, Uber, what does Uber sell? If you think of Uber, it doesn't have anything on its own. As I told you, it has a low number of staff. It doesn't have much of physical assets. They don't own any car. And this is the basic Uber business plan. The idea, you can start at any point in the this circle. You can start that more geographical coverage and saturation will lead to faster pickup. Faster pickup will lead to more demand. More demand will bring more driver will lead to more geographical coverage. And similarly, you can go into the other circle that can be created. More geographical coverage will lead to less driver downtime. Driver would be willing to pick customer at lower price. That will give rise to more demand. So now you can contrast this with the traditional businesses. In traditional businesses, what was happening? As more and more customers were interested in buying it, the average cost was falling. And as average cost was falling, of course, businesses were keeping most part for themselves, but they were also able to part some of this reduction in cost to customer, and they were able to reap benefit. So the story was coming from the supply side. Things were happening on the supply side. Now, if you think of this platform business, the focus has shifted to customer also. The customers have become active part. They are generating the network effect. One of my student who just graduated, now he has become assistant professor. He says that it will take him a day or two to.
Offline हो गया, online हुआ होगी.
So what we can say that, someone can come up with the same app in a day or two. It's not difficult, but why they are not getting any competition? The reason is simply that, if you develop an app, why would, let us say, if it's app that's trying to cater to the restaurant business like Zomato, if you have an app which has better features than Zomato, think about what would happen. Customers would not like to have that app because there are no restaurants there, and restaurants will not like to have that app, serve on that app, because there are no customer. So each side needs the other side. What is Zomato selling? Zomato is basically selling the access. They are giving access of one side to the other side. That's the whole business model. And they are able to do it beautifully. In the beginning, they thought of a business idea, and they are able to generate enough of network effect, and now they are capturing that network effect for their own benefit also. Next slide, please. Yeah. So this just, I wanted to contrast that I already talked about. So next slide, please. Okay. So this is what, one can say, one can think of the difference between traditional businesses, and one can And platform business, we can say products have features. We are interested in a particular product, how feature rich it is, how attracted we are towards to that feature. Platforms, they nurture communities. And of course, these communities can be, the point is that communities can be very fickle. If someone, like on basic products, if someone gives better features, they will move to that particular product. Same thing can happen on platform also. If a platform comes up with better managing skills, better communities, people would immediately move to that new platform. Next slide, please. Okay. So now let us talk next 5 minutes. Let us talk about regulation. Basically, the way we want to regulate in digital, there is no proposed law for digital platform only. What we are proposing is called digital competition law, which would be applicable to all the platforms. So basically, we are largely, at least basic framework, we are copying from Europeans. And when it comes to regulation, Europeans are known as a tough regulator, much tougher than American. The negative side is that it's an empirical fact that these tough regulation also stifle innovations. So that we have to understand, perhaps, at least my reading of competition law in India, the proposed law in India, perhaps we are not thinking from that perspective. What this basic feature of this law is, in US also, Europe also, they have done it. In India also, we are doing the same thing. We want to designate large firms as gatekeepers. Europeans are calling it gatekeepers. In India, we are calling it systematically significant digital enterprises, SSD. And these gatekeepers will have to face a range of prohibition and obligation. In Europe from March 22. In India, it is not yet notified. Still a lot of discussion is going on, but the idea remains the same. The whole focus is, my reading of the proposed law is very simple, that the lawmaker or the proposer, the committee members, 16 committee members, they were worried about the network effect and tipping. I just want to say, think about, and one example that comes in mind in such thing is Facebook. It's very difficult to replace Facebook because they have established the dominant position. But I just want to remind you that Facebook at best is social media 3.0. Before Facebook, we had Orkut, we had MySpace. Even before that, we had Friendster. So it's not like, a social media which first established its dominant position remained in the market. I would like to give another example of YouTube. YouTube today, it's owned by Google. Of course, Google purchased it, but the story began with a small time, these three recent graduates started this particular business. In fact, Google Video was another product competing in the same domain. Yahoo had another product, and all these were giants, and they failed miserably. So digital world in itself gives a level playing field. And network effect cannot, even on networks, there are congestion. If you go to the traditional network of the telephony in India, you will have poor network connection because we have so many people. So the congestion is the issue. In US, you have poor network because they have poor coverage. They have not built enough towers. But we have enough towers, but those towers have also reached to their peak limit, and that's why calls are dropping. So what I'm trying to say, that network effect is not always positive. That's what we have to understand. That's what we have to keep in mind, because if we regulate based on just positive network effect, that would not, give us the optimal result. Next slide, please. Next slide, please. So, no, so sorry, previous slide. Sorry, previous slide. So Okay, I remember what I have written on those slides. So 3 points that you understand. Why do we, I am I'm a great believer of market. Market correct itself, but sometimes it fails, and all failure can be classified into these three categories. One is externality. It means buyers or sellers are the way they are consuming the product, they are not internalizing all the cost, like that happens in case of pollution. Of course, that's where you have to regulate the market, because neither consumer nor producer would be able to self-regulate. Another is information asymmetry, that either buyer or seller may not know all the details. That's where government has to come in, and government has to do some sort of regulation. And third is a monopoly power, that that monopoly power leads to stifling of competition, which is very harmful for consumers as large, and other businesses which are not able to come up with. So monopoly power also needs to be regulated. But one problem with these digital platforms particularly, that it's all about size. If there is no size, then those businesses are not beneficial. So if you start regulating them right at the beginning, if they are not able to achieve a good size, then you will get suboptimal results. So what is the way out? And I was, take again this example of UPI. UPI is a very good level playing field. Rather than regulating the businesses, you provide some sort of middleware, firmware that you can say, and that is available at marginal cost, because the scale is coming from that middleware, like that ONDC can do it, or UPI is doing it, and you allow everyone to participate. People, different entrepreneurs can build services on it and earn some profit. But over regulation would definitely kill the golden goose, and India, I think, has already it's behind in manufacturing. This is an area where we have natural advantage. So perhaps this is one area which needs to be nurtured and understood well, and it's by nature, it's giving level playing field to whole world. So that's why over regulation may be, market distorting, may not be that beneficial for us. So that's it. That's a very basic overview on the platform businesses and its regulation. I focused little less on digital world, but I should add two things, that that this is the digital innovation is something that is platformizing even the traditional businesses. And one example could be on, the Amazon is not attractive because, not only attractive because it has a lot of product, but it's also attractive. It gives you good feedback, whether the item is good or not. So that data, the bringing the data together has helped has helped Amazon platformize its business. So that's where digital nature of these products are helping different business entities. So next slide. I think I am right on time. That I already talked about. Thank you very much. That's it on platform business from
Thank
my
you
side.
very much, Dr. Vimal. We greatly enjoyed listening to you, and I think
Yeah.
Let me take a few questions from my side to Dr. Ajay first, and then I'll come to you before I open the floor for discussion. Sir, I would request you to kindly speak on PLI. PLI has been quite a game changer as far as trust between government and industry goes, as also it has brought in considerable boost to the manufacturing sector. So could you please elaborate your views on how different do you see PLI from the numerous other schemes that government is running? And the second one that I wanted to discuss with you is the second order benefits of digitization. Have we reached that stage where we can move forward and say that the first level of digitization is complete and we can move to the next stage, which is digitalization or even digital transformation of institutions? So, at what level do you see India's digitization programs right now. So this was a set of two questions for you, sir. Of course, on the group, there are questions. I'll open them up.
Yeah, sure. So, I think PLI, to my mind, is great and different from everything else that we have done to promote industries, primarily because it promotes going to bigger scale. Like I mentioned earlier, most of our earlier schemes would be so oriented to help small and medium enterprises. And it was expected that if you had grown big, you didn't need support from the government any further. Of course, one exception to this rule was, and you may remember this, was the tax benefit which was given to IT industries in the early 2000s. The benefit to the IT industry was that you would get income tax exemption on the software exports. And there was no limit to how much income tax exemption would be given. And of course, this led to IT industry really, and we saw some huge global, leaders, including TCS, Infosys, Wipro, and so on and so forth. Because there was, even when you grew bigger, you would still get all the incentives that government was providing. Apart from that software tax incentive, I cannot recall any government scheme which has promoted growth in the industrial sector in India in the past. And PLI is different. PLI has actually gone a step further. It says not only we will start incentivizing you if you reach a minimum level of growth, and the more you grow, the more incentive you get. And to that extent, it is different. So yes, PLI, I think, is a great scheme in terms of the direction in which it is incentivizing, because ultimately we will all agree that the objective of such schemes is to have greater industrialization, greater industrial growth. However, I do not think that the issue of trust, which is a larger issue between governance and public policy making, is still resolved. PLI is no different, and I'm sure the processes that are adopted for verifying the claims, etc., of the companies are not very different in PLI from as compared to the schemes in the past. So I think while PLI has made a huge transformation with respect to the to what is being incentivized, I think the issue of trust remains to be resolved. The second question which you mentioned with respect to second order effects, yes. So I think the second order effects start emerging even when you start doing the first order digitization. And it is very important to be able to be sensitive to these changes that are happening. In fact, one of the very interesting stories which started which was noticed of second order effects, it's a very famous story, is when for the first time airline reservations was taken up. American Airlines was the first airline in the world to have set up a platform to make airline reservation. Prior to that, all airline reservations were manual through agents. Each agent would be given a quota of seats. And what would happen is particular agent would sell all his quota and possibly want more seats. Some other agent would have seats remaining, but he would not know that there is demand for seats in some other region or area. As a result, when airline registration computerization came in, American Airlines suddenly increased its efficiency, and that was a direct effect of computerization. What was more important was when this happened, all the other airlines actually wanted this system to be implemented. And American Airlines thereafter started licensing its system. Later on, in fact, much later, just American Airlines spun out a separate company out of this, and for a long time, till very recently, till about 10 years back, that system was what was powering all airline computerization across the world. Interestingly,